Welcome to our deep dives today. We're going to be tackling something that I think is on a lot of people's minds these days, and that is how to adjust your investment strategy.
Oh, yeah.
Because it feels like things are changing so rapidly.
Absolutely.
It feels like we're at a crossroads.
Yeah.
You know, we've got rapid technological advancements going on.
Right.
We've got all this political uncertainty. Economic uncertainty is always there.
Of course.
And, you know, even the nature of money itself is being challenged these days. So how do you make smart investment decisions when it feels like the ground is constantly shifting beneath your feet?
Right.
Well, that's what we're diving into today.
Okay.
And we've got some fascinating sources to help us kind of unpack all of this.
I'm excited.
We're going to be looking at excerpts from a book called Economic Crossroads, which uses historical parallels to kind of give us a guide to the future. We're also going to be looking at President Trump's America First energy priorities and seeing how those might play into things. And then we're also going to bring in some insights from Ray Dalio's The Changing World Order.
Yeah, that's a great book.
Which is always a fascinating read.
It is.
So Economic Crossroads.
It
really points out some, I think, intriguing parallels between historical shifts that we've seen in the past and kind of what we're going through right now.
Yes.
And one of the things that they talk about that I found really interesting is they compare the AI revolution to the Industrial Revolution.
Okay.
But happening at a much more accelerated pace.
Right. Much faster.
Much faster. Exactly.
Yeah.
So just like we saw with the Industrial Revolution, we're seeing jobs disappear, new ones emerge. But the question is, will those benefits be widely distributed?
Right.
Or will they be concentrated among a select few?
Yeah. Will everyone benefit or just a small group of people? That's really important to consider.
That's a really good point. And that's something that as investors we really need to be thinking about is, you know, which companies, which sectors are going to kind of come out on top in this new landscape.
Exactly. And it's not just about picking the right technologies, but understanding the broader societal and economic implications.
Right. Because it's not just about technology.
No.
It's about how that technology is actually going to be used and how it's going to impact people's lives.
Yeah, that's right.
And that's where I think Dalio's work really comes in.
Okay.
Because he talks a lot about, you know, he emphasizes the importance of looking at the distribution of gains from any kind of technological advancement. So is AI going to lead to inclusive growth? Is it going to lift everyone up?
Right.
Or is it going to exacerbate existing inequalities?
Yeah.
You know, create more social and economic instability. And I think understanding those dynamics is crucial for making informed investment decisions.
Absolutely. We need to look beyond just the technology itself and think about the bigger picture. How will it impact society? How will it impact the economy?
Right. So it's not just about, you know, picking the hottest tech stock.
Yeah.
It's really about thinking about, you know, the bigger picture, the potential winners and losers in this transformation that we're going through.
And Economic Crossroads does a good job of laying out two potential paths for the next 5 years.
Okay, so they actually give us like two scenarios.
Yeah, they call them Path A and Path B.
Okay, so tell me about Path A.
Well, Path A is what they call the tech renaissance. This is a scenario where AI boosts productivity, leads to lots of new jobs, everyone benefits. It's kind of like that post-war boom in the 1950s.
Okay, so that's like the rosy scenario.
Yeah, it's very optimistic.
Okay, and what about Path B?
Path B is what they call the tech disruption. This is where the benefits of AI mainly go to the people at the top, job losses outpace the creation of new jobs, and you see rising social and economic tensions. And this path actually has some similarities to the 1930s.
Oh, wow. So two very different scenarios.
Yeah.
With very different implications for investors.
Absolutely.
So how do we even begin to assess, you know, which path is more likely?
That's the million-dollar question, right?
Yeah.
And Economic Crossroads argues that the deciding factor is going to be how those gains from AI are actually distributed.
Okay.
If we can create policies and structures that ensure that the benefits are shared broadly, then Path A, the tech renaissance, becomes more likely.
Okay.
But if those gains are concentrated in the hands of a small elite, then we're probably headed towards Path B, the tech disruption.
So it sounds like government policies and regulations are going to play a big role in shaping which path we end up on.
Absolutely.
And speaking of government policies, let's bring in President Trump's America First energy plan.
Okay.
Because we've got some excerpts here that outline some pretty bold moves.
Yeah.
We're talking about shifting away from wind farms, declaring an energy emergency, and a big push for traditional energy infrastructure. So how does this fit into everything that we've been talking about?
Well, this is where things get really interesting and complex. Because President Trump's energy policies have the potential to create both opportunities and challenges for investors.
Okay.
On the one hand, you could see a short-term boost for companies that are involved in traditional energy production, oil, gas pipelines.
Right.
Things like that. And also companies that might benefit from reduced investment in renewables.
Yeah.
But on the other hand, these policies could exacerbate geopolitical tensions, they could accelerate climate change, and they could ultimately hinder the transition to a more sustainable energy future. It sounds like there's a lot of moving pieces here.
There are.
And it can be tough for investors to kind of make sense of it all and start making decisions.
Yeah, and I think the key is to remember that investing in this environment requires a long-term perspective.
Okay.
And a willingness to adapt as things change.
Because things are going to keep changing.
Absolutely.
So Economic Crossroads talks about this. You're encouraging investors to think about their portfolios in a new way.
To consider not just individual companies or sectors, but also the broader trends that are shaping the future.
Right. It's about understanding those macro forces.
So it's not just about picking stocks.
No.
It's really about understanding the forces that are going to drive the market over the next 5, 10, 20 years.
Exactly. It's about seeing the bigger picture.
Okay, so where do we even begin with that?
Well, we're going to delve into some specific investment recommendations in the next part of our deep dive.
Okay, so we're going to get into the nitty-gritty of how to actually position your portfolio in this environment.
Yes.
But first, I want to take a look at another key piece of the puzzle here.
Okay.
And that is the potential shift in the global reserve currency.
Oh, yeah, that's a big one.
Because this is where I think Dalio's insights on the rise and fall of empires become incredibly relevant.
Absolutely. He makes some really interesting points about that.
So are you saying that the mighty U.S. dollar could actually lose its top spot?
Well, history teaches us that nothing lasts forever. And Dalio's point is not necessarily to predict the dollar's demise, but to understand the factors that contribute to the rise and fall of reserve currencies.
Okay.
And he argues that things like excessive debt, loss of competitiveness, geopolitical challenges, these can all erode a currency's dominance.
Okay.
And these are all factors that we're seeing play out in the global landscape right now.
So this is getting a little bit unsettling.
It is a little unsettling.
But before we spiral into a full-blown financial panic, I think we need to kind of take a deep breath and break down these complex ideas into some actionable insights.
Absolutely. Let's do that.
So we're going to explore the potential consequences of this shifting world order.
Okay.
And how you can position your investments for a future that is more uncertain than ever.
Right, because uncertainty is the name of the game these days.
It really is. In part 2 of our deep dive.
That's good.
Okay, so we've set the stage with some pretty weighty concepts. AI, political shifts, the future of the U.S. dollar. Let's get practical. Economic Crossroads actually gives us some specific investment recommendations.
They do for this 3-year period that we're looking at.
Okay, so where do they suggest we put our money?
Well, they highlight a few key sectors that they think are poised to benefit from all these converging trends that we've been talking about.
Give me the rundown.
So they like AI application, they like advanced manufacturing, healthcare tech, alternative energy, and then digital infrastructure.
Okay, let's break those down one by one because some of those sound a little technical.
Yeah.
When we talk about AI application companies, what exactly are we talking about?
So basically, it's companies that are bringing AI solutions to traditional industries.
Okay.
So think logistics, retail, finance, any sector where machine learning can really boost efficiency and productivity.
So instead of trying to pick the winning AI company, which is probably pretty hard.
Yeah, incredibly difficult.
You're betting on the companies that are using AI to gain a competitive edge.
Exactly.
Okay, that makes sense. What about advanced manufacturing? Is this kind of a resurgence of made in America?
It is, but it's a little bit more nuanced than that. The book argues that automation and domestic production capabilities are becoming increasingly intertwined.
Okay.
It's not just about bringing back, low-skill manufacturing jobs. It's about leveraging technology to create a more resilient and competitive domestic manufacturing base.
So think high-tech factories, robots working side by side with skilled technicians.
Exactly.
Interesting. Healthcare tech, are we talking, Personalized medicine, robotic surgeons, all that.
Those are definitely part of it.
Okay.
But the book goes deeper. They're talking about AI-enhanced diagnostics, drug discovery, remote patient monitoring. Basically using technology to improve outcomes and reduce costs throughout the whole healthcare system.
So it's a broad sector.
Yeah.
With a lot of potential for growth.
A lot of potential.
Now, alternative energy, with President Trump kind of declaring this energy emergency and shifting away from wind farms.
Yeah.
Is this a recommendation to just go all in on oil and gas?
Well, it's not that simple.
Okay.
I think it's more about recognizing the long-term need for energy independence and diversification.
Okay.
And while the current administration might prioritize those traditional sources, economic Crossroads is really emphasizing the importance of a range of alternative energy technologies.
So don't put all your eggs in the fossil fuel basket.
Exactly. Hedge your bets.
Okay. Last one, digital infrastructure.
Wow.
What exactly falls under that umbrella?
So think data centers, fiber optic networks, cloud computing platforms, all the backbone of the internet, basically.
Well,
and those become essential as our world becomes increasingly digital.
Yeah.
And even more so if we see a kind of fragmentation of global economies like Dalio talks about.
Right. So as the world gets more digital and potentially more divided, these digital infrastructure companies stand to benefit. Okay, that makes sense. Now, how do we actually allocate our portfolio? I mean, we've got these sectors, but like how much do we put in each one?
Right. So economic Crossroads suggests a pretty significant shift from that traditional 60-40 stock bond portfolio.
Okay.
They recommend 40 to 50% equities.
Okay.
15 to 25% fixed income.
Okay.
15 to 20% real estate.
Wow.
15 to 20% cash.
Okay.
And then 10 to 15% alternative assets.
That is very different.
It is.
Than what you typically hear about.
Yeah. It's definitely more tailored to this specific environment.
What's the logic behind these shifts?
So there are a few key factors. First, they're anticipating a potential peak in tech valuations.
Okay, right. We were talking about that possibility of a tech bubble earlier.
Exactly.
Yeah.
So as a way to manage that risk, they suggest increasing international diversification, particularly outside of any China-U.S. conflict zones.
So spread your bets geographically.
Yes.
Especially with those two superpowers kind of facing off. Okay, that makes sense. What about the fixed income allocation? Because usually it's like, go with government bonds.
Right. Well, in this case, they actually recommend prioritizing corporate debt of those technology implementers that we were talking about earlier. The idea is if these sectors are going to outperform, then the companies within them should also be in a strong position to service their debt.
So you're kind of aligning your fixed income investments with the broader trends that you're betting on.
Exactly.
I like that. What about real estate?
So they suggest shifting towards residential properties in emerging tech hubs.
Interesting.
As those sectors grow, the demand for housing in those areas is likely to increase as well.
So you're not just investing in tech, you're investing in the real estate that supports its growth.
Exactly.
Okay, that's a really interesting angle. Now, 15 to 20% cash, that seems like a lot.
Yeah, it is higher than usual.
Why such a high allocation?
Well, it reflects the need for kind of defensive positioning, given all this uncertainty. The potential tech valuation peak, the geopolitical stuff, cash gives you flexibility to take advantage of opportunities that might arise during a downturn.
Cash is king, as they say, especially in volatile times.
Absolutely.
What about alternative assets? What falls under that category?
This is where things get really interesting. Cryptocurrency is in here.
Okay.
The book acknowledges its potential, but also emphasizes that inherent risk.
Yeah, it's definitely a volatile asset class.
It is. They also suggest looking at commodities and private equity, which can offer diversification and a hedge against inflation.
So there's something for everyone, from the cautious investor to those with a higher risk tolerance.
Exactly.
Now, economic Crossroads also gives us a warning sign to watch out for, and that is tech valuations reaching 35x plus earnings multiples while interest rates are rising.
Yeah, that's a big red flag.
Why is that significant?
Because that pattern was observed before the market crashes in 1929 and 2000.
Oh, wow.
So it could signal a tech bubble about to burst.
Yeah.
It's definitely something investors need to be aware of.
So it's not just about blindly following these recommendations.
Yeah.
Investors need to stay informed, monitor the market, and be prepared to adjust their strategies as needed.
Absolutely. And remember, this is just one perspective. It's crucial to do your own research consult with a financial advisor and develop a strategy that's aligned with your own personal goals and risk tolerance.
Now, let's circle back to Dalio's insights, because I think this is really important. We touched on this earlier, but his idea that the U.S. dollar could potentially lose its reserve currency status. I mean, this is a huge deal if it happens.
It is.
What does Dalio's research actually tell us about how this might play out?
Well, he uses a fascinating case study.
Okay.
The Dutch guilder.
Okay.
It was once a dominant reserve currency, but eventually it lost its top spot.
Okay, so it's happened before.
It has. And he highlights the factors that led to its demise.
Okay, what were they?
Excessive debt loss of competitiveness, costly wars, all warning signs that we need to be paying attention to in our current environment.
Okay, so the dollar isn't invincible.
No currency is.
But hold on, if it weakens significantly, what happens to all those U.S. dollar-denominated assets?
Right.
Like stocks and bonds and even just savings.
Yeah, that's a great question, and one we'll dive into in part 3 of our deep dive.
Okay, so we're going to explore the potential consequences of a shifting world order and how you can position your investments for a future where the U.S. dollar might not hold the same sway it does today.
We are.
Okay, so we've covered a lot in this deep dive. Tech bubbles, the future of the U.S. dollar. Now, let's unpack what a shift in global reserve currency could really mean for your investments. It's a big concept, so let's try to make it as concrete as possible for our listeners. What would a world without the U.S. dollar as like the dominant force even look like?
Well, imagine a world where international trade isn't primarily conducted in U.S. dollars. So that means that the prices of imports and exports could fluctuate more dramatically just based on currency exchange rates. Countries wouldn't need to hold as many U.S. dollar reserves,
Right.
which could also impact the dollar's value. And consequently, that could affect the value of your U.S. dollar-denominated assets.
Okay, I see how this could get complicated.
Yeah.
So what happens to my stock portfolio if the dollar weakens significantly?
Well, if the dollar weakens relative to other currencies, your U.S. stock holdings would be worth less when you measure them in those other currencies.
Okay.
Now, that doesn't necessarily mean they lose inherent value,
Right.
but their purchasing power in the global market would decrease.
So it's like everything in the U.S. gets a little bit cheaper for people buying with stronger currencies.
Exactly.
Could that make U.S. exports more attractive?
It could. A weaker dollar can actually boost U.S. exports, making them more competitive globally.
Yeah.
And this could benefit certain U.S. companies, particularly those that are heavily reliant on international sales.
Okay, so there's a potential upside for some companies. What about my bonds? Are those impacted by a weaker dollar?
They could be. U.S. dollar-denominated bonds could become less attractive to foreign investors if the dollar weakens.
Okay.
And that could lead to lower demand, potentially driving down bond prices.
So it's kind of a mixed bag.
Yeah.
A weaker dollar might help some U.S. companies, but it could also hurt the value of my U.S. dollar-based investments. This is where diversification becomes even more critical, right?
Absolutely. Spreading your investments across different asset classes, currencies, and geographic regions is going to be crucial in a world where the U.S. dollar's dominance might be waning.
Okay, so we've talked about diversification a lot in this deep dive.
We have.
What are some concrete ways that listeners can actually diversify their portfolios?
Well, one pretty straightforward approach is investing in international mutual funds or exchange-traded funds, ETFs.
Okay.
Those provide exposure to a basket of foreign stocks or bonds and offer a simple and cost-effective way to diversify internationally. You don't need to become an expert in global markets.
So ETFs can be a good way to kind of dip your toes into those international waters.
Exactly.
What other strategies should we consider in light of this potential shift?
Well, Dalio emphasizes the importance of assets with intrinsic value during times of currency fluctuation. Think gold, silver, real estate, or even commodities. These assets tend to hold their value relatively well, even during periods of economic uncertainty.
So a little bit of gold might be a good hedge against a weakening dollar.
It could be.
What else should we be doing to prepare for this kind of uncertain future?
I think the most important thing is just to be prepared for volatility.
Right.
We're in uncharted territory here.
Yeah.
So expect the unexpected. Don't panic if the market takes a downturn.
Right.
Instead, focus on your long-term goals and adjust your strategy as needed.
That's good advice for any market, really. Stay calm and ride out the waves.
Exactly.
This deep dive has been packed with information and potential scenarios. What's the most important takeaway you want listeners to walk away with?
You know, I think it goes back to Dalio's words. Knowledge is power. The more you understand about these historical cycles and the forces shaping the global economy, the better equipped you'll be to navigate the uncertainties ahead.
Right.
Keep learning, stay curious, and remember the future is not predetermined. We have the power to shape it through our actions and decisions.
That's an inspiring thought to end on. This deep dive has certainly given us all a lot to think about as we navigate these shifting landscapes. Remember, knowledge is your best asset. Keep exploring, stay informed, and most importantly, never stop learning. This is your deep dive, and it doesn't end here. Thanks for joining us.